Welcome to this week's live ASX strategy session. Thanks for joining me. Great having you with me for another show. Heaps of interesting things to talk about this week. Several all-time highs in the markets. Interesting things going on in the commodity markets as well. We're going to have a look at that. The small caps. Also, any stocks that you're interested in, any ticker codes you'd like me to have a look at, get them ready. We're going to look at those towards the back end of the show. Now, as always, everything today, general commentary only, doesn't take your personal situation into account. Having been through all of that, let's get into this week's first chart. So we'll start off with the ASX 200. It's been a week of consolidation for the ASX 200. But the big story has really been in the ASX 200 equal weight. And I'll come back to that in a moment and go through that with you. And also over in the US, it's a new all-time high. But the question is the rally overextended? I've got an indicator to show you a bit later. It gives an interesting perspective on where the market currently is. But before we get to that, let's check out this price action, latest price action in the ASX 200. So prices have been consolidating this week, and that follows a strong move higher towards the end of last week. And you can see that here. So prices broke higher after about 5 weeks of just trading sideways through that consolidation. And I think the latest breakout that we've just witnessed, I think that provides confirmation that the path of least resistance remains to the upside. And it's interesting to look at the lows during the consolidation. So what you'll notice, where I just put in the cursor, you notice those lows were progressively getting higher as time moved on. So that's a telltale sign of buyers increasing their bids and paying up to get into the market. And of course, that resolved towards the end of last week with a break higher. So just looking at the price action from this week, and I think it's generally positive that price action has been steady. It's held on to most of those gains from the prior week, and it's traded sideways and it's been steady. And what that does, it gives the market a chance to digest that latest or most recent rally. And then it starts to build a platform for potentially another leg higher in whenever that may be in the days or weeks ahead. I think the key takeaway when I look at this chart and we take it all in, I think it's that we have rising moving averages, so the 50-day being the red and the 100-day being the blue. We have rising moving averages, they're trending higher. And when you get that situation, that's a textbook bullish trend. And when that's the case, it tends to be that the odds favour further upside. So maybe not tomorrow, maybe not next week, but broadly over the period ahead, when you have the condition of price being above rising moving averages, the odds tend to favour higher levels are somewhere in the time ahead. So that doesn't, of course, rule out the possibility that we can't see a longer or a larger pullback. Of course, that's always going to be a possibility. We get these strong rallying periods, and we do get those larger pullbacks. They do occur as part of markets, and that's what risk management, like stop losses, are all about. Therefore, preparing for those inevitable pullbacks when they do occur. But I think rather than stand back and worry about what could go wrong, I think the correct approach is to go with what's currently working. And what's currently working is being long stocks, and that's being on this rising trend. That's what's working at the moment. Now, I want to show you what really got my attention over the last week and a half. It's been the equal weight, so the ASX 200 on an equal weight basis. So this one here is market capitalisation based. So the biggest stock has the most influence, and the smaller stock of those top 200 has the least. When we switch to an equal weight, everyone's ranked equally. So let's jump over to the equal weight. And so what we have here and just before I go on and talk about this chart, I'm just going to tidy it a touch. You can just see this blue support line, horizontal support line I've got in here. I'm just going to take that off. It's still a meaningful level. It's still relevant to the price action that had been, but it's at the moment I think it's just cluttering the chart. Prices are well above it, and all these stripes, it makes the chart look a bit like a national flag. So I'm just going to take that off, just to keep our focus on where the price action more is now. So coming back to this price action. Look at this rally. Look at this rally over the last week and a half. So while the ASX 200, you remember from that chart, has been tracking sideways, the equal weight, it's put on this this strong burst of activity. It's been up as much as, so over the last week and a half. So from, let's say, Wednesday the 9th of July, it's been up as much as about 4.4%. Compare that to the ASX 200, it's a touch over 3%. So we've seen this outperformance in the equal weight. And the equal weight is also now into all-time high territory. And so let me just compress this. So there's the previous all-time high from February. Prior to that, we had an earlier all-time high that was back in the early days of 2022. So the equal weight has now comfortably cleared both of those previous peaks. So what does this outperformance in the equal weight tell us? Well, firstly, it indicates that this is a broad-based rally. There's money flowing into the market generally. It's not just focused on CBA or some sort of a narrow selection of big cap stocks. It's also not about a hot sector which is pulling the market along. When you get the equal weight making new all-time highs, it's typically more about broad-based market participation. And I think that's really important because healthy bull markets tend to be broad-based. It's when you get the ASX 200 making new highs and the equal weight is struggling. So say the ASX 200 was at all-time highs and the equal weight was still down here, like battling its way up. That's when I get more concerned. That's when I think, look, maybe this is a narrow rally. Maybe there are underlying issues. But what we have here with the equal weight leading the way, I think that's is a positive. Prices have run fairly hard over the last week and a half. You can see them like how prices got just pausing below resistance, just above the moving averages, and now they've shot higher. So they have run fairly hard over that period, and they are getting a little stretched above the 50-day moving average. You see the 50-day average, see prices, so they are getting a bit stretched. So I wouldn't be surprised if we did get some near-term consolidation. In fact, a week or even several weeks of consolidation of sideways price action, where the market chops sideways and the moving averages catch up, that's often a good thing, because the thing is that sustainable rallies, they typically have many pauses along the way. And just like we've seen in recent times, we had a strong rally and we had several weeks of paused price action. That's often a positive. It's when prices just lift off and go parabolically higher, that's when we can be more likely to see trouble from that type of situation. So an orderly advance with the pauses and the consolidations, it's generally a good thing. So maybe we see that, and if we do, I think that's positive. Just quickly coming back to the ASX 200, I think the overall structure here is, I think it's good. I think it's positive. The path of least resistance at this point remains upwards. I'm happy to stay long the ASX 200 index. I'm happy to stay long ASX 200 or ASX stocks generally. A lot of my exposures in the small caps. We'll get to that a little bit later on. And I think it's a case of being positioned with the momentum. And as always, I'm using those wide trailing stops to help me see off those pullbacks, as inevitable pullbacks when they do occur, and also to get me out when conditions do at some point change. But at this point, the trend is very much upwards. Now, if you're getting some value from this, hit that like button, hit the subscribe button, leave a comment, tell me what you think the ASX 200 is going to do next. Anything you like, it helps me a lot because YouTube shows people the free portion of the video, and the more people watching, it helps me a lot. So please do those things: like, sub, and comment. Okay, so let's jump over to the US market next. We're also going to go through the small caps, the commodities. I'm going to go through your stock codes. So we've got a busy section coming up. And and another thing, I've also got a couple of ETFs that I bought this week that I'm going to tell you about. I'll tell you about that after as we go through the latter section. And one's a sector ETF, which is, I don't think you probably wouldn't have seen it before, and one is a country ETF, which I think is worth having a bit of a look at. All right, so let's jump over to the S&P 500. And so both the S&P 500 and the Nasdaq have made new all-time highs this week. And Thursday's all-time high in the S&P 500, it was the 13th of this year, the 13th all-time high this year, and that continues a streak of all-time highs since late June. So from around this area here, we've got several all-time highs over that 4 or 5 week period. From a structural perspective, everything appears to be in good order. So what we've got a clear sequence of rising lows and, of course, rising highs to go with that. The moving averages are trending higher. So again, I've got the 50 and the 100-day moving averages. They're both trending higher. And all importantly, price is above the moving averages and hitting new highs. So that's all textbook bullish. I think this raises a question of whether prices have rallied too far too quickly. So there are two tests we can do to help evaluate that. So the first one I want to quickly look at is how long have prices been above this 50-day moving average without a retest. So staying above the average without coming back and retesting it, which we see prices do often within bullish phases. You can see prices rally back to the average, rally back to the average, and so on. So how long's it been? How long's it been above the 50-day? Well, this is the last time it touched the 50-day back in the 7th of May. And that works out to be 53 days ago. So it's getting up there. It's been a fairly long stretch without a pull time, without a pullback to the 50-day moving average. But it's by no means a record. Just look at this stretch from 2023 into 2024. So see, leaving the moving averages back in November 23, not touching again until April 24. So that was 110 days. So when you look at it from that perspective, the current extreme the current period isn't extreme. And it's not to say that it's going to emulate what we saw in another period. It's going to do whatever it does. But the point is that it's not at an historically stretched time or extended time above the moving averages. Then the next check I want to check whether price is stretched above the 50-day moving average. Because when you look at first glance, when you look at this, you might say, oh, look, prices are getting a bit stretched above the 50-day moving average. And when they get stretched above the average, they often do come back. So these periods where it does get somewhat elevated, it does pull back to the averages at some point. So rather than just rely on what our eye picks up, let's actually put on an indicator so we get a calculation. If you've been following me for a while, you'll know this indicator. It just shows how far above or below the 50-day moving average price currently is. And when we compress this to have a bit of a look, you can see that, look, where prices currently are, just trying to draw this without getting a whole lot of getting these markers here, so it stops me from drawing what I need to draw. You know, we can run this along. I just take it a little bit across. It's prices are currently at they're reasonably elevated, but they're not extreme. They're not at excessive levels. They've come back from their recent peak. So I'd say The S&P 500, yes, it's elevated above its 50-day moving average, but it's not extremely elevated. So, yes, there's room for some consolidation, but it could also keep pushing higher in the near term as well. There's no extreme stretchiness in the pull away from the average. So, from those two measures, I think we say that yes, of course, there's scope for consolidation. That's always possible after these big advantages, after these big advances. But there are also no warning signs that appear overly worrisome to me when I look at those two measures. What we have is a trending market with the potential to trend higher over the weeks and months ahead. I want to have a look at the equal weight as well on the S&P 500, and I think that's also useful to take in. It made a new record, not a record high, but it made a new recovery high on Thursday. The record high is back here from November 24, close but not quite just yet. As I said, you might remember I said last week that I thought maybe we'd see a bit more consolidation prior to a rally. Like we had this consolidation playing out. I thought maybe we get a bit more chop sideways while the moving averages continue to move higher. But that's not how it played out. Prices have popped higher this week. I thought maybe be a bit more like this May, June, just take a little bit longer to trade sideways. But look, things have moved on a little bit quicker. And that's the thing with trying to time the market. So sometimes we get it right, other times we don't. I find that timing is useful for entries and exits. So what timing can do, and looking at the chart structure, can help us identify asymmetric entry points. So that's where the risk reward is we calculate to be in our favor, or we believe is in our favor, and then timing can help us cut stocks that are falling. So we exit and we protect capital. But I make my money by staying on trends. That's how I think the money's made. It's not made by trying to time it from day to day or week to week. It's by staying on trends when trends are in play, and that's what we've been discussing since around mid-April, where we started talking about getting money back into the market. Then it's been a case of letting that momentum do what it does, see where the momentum takes us, and that hasn't changed. I still think that's the way to approach this market, staying with that trend, and really that's what trend following is all about, and that's what I do with Motion Trader. It's helping members do that with individual stocks, not just with the indices, but the individual stocks, identifying, staying with the trend. And that's what it's all about. It's about identifying the opportunities, going with momentum, managing risk, and then letting profits run. That's been the play over the last 2-3 months. That hasn't changed. I think the positive price action in the equal weight, I think this is a sign of that broadening participation, just like we spoke about with the ASX 200. This isn't a case of it just being Nvidia or Microsoft pulling the market higher. There are lots of stocks participating to be making this equal weight S&P 500 go up in price, and for me that's a sign of a healthy market. I continue to believe the play here it's staying long stocks rather than looking for a reason for stocks to fall, and I think that means being open to the possibility that stocks can rally further. One of the things I'll tell you, one of the things which I've learned over the years, it's the optimists who tend to make the most money in the stock market. So rather than looking for something that's working to stop working, look on it with open mind and go, well, yeah, maybe it can keep rising. And of course, you've got to manage risk. It's not that blind optimism, but nonetheless, when something's working, let it work for as long as possible. Okay, so let's jump over to the small caps now. We're going to look at the small ordinaries, the US small caps, the commodities. I've got those 2 ETFs I want to show you, and of course, all of your stocks. But of course, that wraps up the free section. If you're not a strategy session member, there's a link below. Click that, come in. You get the rest of today on replay. and then you can come in live next week and ask about your own stock codes. So think about doing that. Costs you very little, and I think you'll get a whole lot for the cup of coffee type money we're talking about for coming on in. Okay, so let's start with the US small caps. We'll go to the Russell.